Okay. Hello, and thank you for joining us today for this webinar entitled Demystifying the SEC's Cybersecurity Disclosure Rules. My name is Trevor Donlan. I'm a partner and managing director in the risk advisory practice of AlixPartners. Prior to joining AlixPartners earlier this year, I spent the prior 8 years in the Securities and Exchange Commission's Division of Enforcement. I'm thrilled today to be joined with this panel of distinguished experts in the field that are ready to provide their insights on the new disclosure rules from both the private and public sector perspectives. First, to my right is Eric Forney. Eric is a partner in the white collar and securities practice of the global law firm of DLA Piper. Prior to joining DLA in 2022, Eric was senior trial counsel with the Securities and Exchange Commission. Next to Eric is Sylvester Fontes, the current director of the Boston Regional Office of the SEC, where he oversees staff from both the enforcement and examinations divisions of the agency. Sylvester also brings experience from the private sector, having recently held senior compliance roles at financial services companies. Also joining us today from the SEC in Boston is Amy Guazda. Amy is an assistant director in the enforcement division. She also recently joined the specialized unit within enforcement called the Crypto Assets and Cyber Unit, CACU. This unit is on the leading edge of securities enforcement in this fast-moving and ever-changing area. Finally, I'm excited to be joined today on this panel by my partner, Beth Musumeci. Beth is a partner and managing director at AlixPartners and leads the firm's global cybersecurity practice. Beth is a trusted expert in the cybersecurity field, marshaling clients through challenging incident reporting matters and proactively designing and implementing cybersecurity solutions. Before we dive into some of the details on this panel, I wanted to give Sylvester the floor to provide the SEC's disclaimer on behalf of the SEC staff, and also provide some background on the Boston Regional Office, his role, the Division of Enforcement, and the CACU. Sylvester.
Yes, thank you, Trevor, for having us here today. Sylvester Fontes, Regional Director of the Boston office. With me today, Amy Guazda, who's an Assistant Director in Enforcement with me in Boston. We just wanted to make clear that statements we make here today are in our official capacities. However, they do not reflect the view of the Commission, the Chair, any other Commissioner, or any other staff member. So with that preliminary out of the way, little background on the Boston office itself. There are approximately 200 employees who call Boston home, where they work out of. The vast majority of those employees work for the Boston office, but we also have, I would say, approximately 10, 15 individuals who also work in the Boston office who are in other divisions and offices but sit in Boston. About half of the office is composed of examination staff and about half of enforcement staff, such as Amy, who leads one of our enforcement groups. So that's the office, and thank you again very much for one of the things that we'll talk about, obviously, is that the SEC, as you all know, has specialized units, and one of the units that we've recently brought to the Boston office is the Crypto Assets and Cyber Unit, which Amy heads in our office, and she'll talk some more about that. But that's something that happened during my tenure, since I've been back at the SEC since January, and that's something that I'm very, very proud of.
Great, thank you very much. Eric, I was hoping you could lay a foundation for us and provide a brief overview of the significant changes in the disclosure framework involving cybersecurity incidents.
Sure. There's really two components, broadly speaking. One is the obligation to disclose material cybersecurity incidents on an 8K or on a 6K if you're a foreign private issuer. Those rules will be effective December 18th of 2023. And that requirement requires issuers to disclose without unreasonable delay material cybersecurity incidents within 4 business days of becoming aware of the incident being material or making that determination. The other component is now annual disclosure obligations, and it really takes two forms, broadly speaking. One is what I'll call governance, which concerns both the board and management's oversight of cybersecurity threats or risks associated with them. The SEC is expecting disclosures under new item 106 in Regulation SK concerning those types of internal oversight that either management or the board will have. And then the other piece is disclosure about the processes that an issuer will have for identifying and mitigating and sort of dealing with, broadly speaking, risks from cybersecurity threats. That's also now an annual disclosure obligation.
Great, thank you. Sylvester, interested to hear your thoughts on the basis for these new regulations, these new requirements, and why these new rules you think would benefit investors.
So I think everyone in this panel is old enough to remember business being conducted primarily with paper as opposed to being conducted now. There's this digitalization of the world that's occurred. Everything now happens, most business occurs electronically. And we have risks now that never existed when many of us were starting in our respective professions. Such as this other thing that's a part of Amy's world now as the leader of the CACU unit, including crypto, which is a way of, which is also relevant to what we're talking about here today. It also introduces certain risks. So with these new risks, I think it's fair to say that it's something that the Commission took a look at. Obviously, these rules were propounded about a year and a half ago and were recently adopted, recently become effective. But I think fundamentally in a lot of ways, they're both new rules, but I don't, in my own view, and these are my own views, I don't think they dramatically change the landscape. And what I mean by that is I would look back at what the chair said himself in the press release when these rules were adopted. And Chair Gensler stated, whether a company loses a factory in a fire or millions of files in a cybersecurity incident, it may be material to investors. And that's sort of the way that I think about it. Is it really, at the end of the day, is consistent with the rules and regulations that have always existed, including specific item in Form 8K, that if there are material effects on your company's operations or financial statements, that needs to be disclosed timely to the SEC. So I view this as a new component, but it's additive as opposed to fundamentally, as opposed to a fundamental amendment of the bedrock of the federal securities regulations, which is that investors need to be made aware in a timely fashion about material events occurring at the company.
Great, thank you very much. Amy, these new rules are not quite effective yet, but they do show that the SEC is taking a firmer stance on disclosure obligations. How do you see the subsequent enforcement of these rules developing over time?
So I would say that I do think that enforcing the new rules will be a priority for the Enforcement Division and the Crypto Assets and Cyber Unit. But the new rules aren't changing, our focus on protecting investors in this space, or the idea that, where there are cyber incidents involving public companies or other market participants, we do consider investors also to be potential victims of those incidents. And so the SEC has brought cases involving public companies and material misleading disclosures about cyber incidents. For example, there have been settled orders, including against the public companies Blackbaud recently in 2023 and Pearson in 2021. As much as this rule does work to have enhanced disclosures in this area, I see, the Enforcement Division and the unit we're going to continue to work to protect investors, and it's not, I don't necessarily see it as a sea change.
Great, thank you. Shifting gears to our next topic, I wanted to get the panel's view on how boards of directors and senior management charged with the responsibility of overseeing the risk and disclosure procedures at public companies and how they should react to these rules. Beth, I want to get your view on what's the board's role with respect to organizational cybersecurity?
Sure. Ultimately, it's to be good stewards of the organization and its stakeholders' information, protecting it from harm or threat, and making sure all of the mechanisms across the enterprise are really aligned and orchestrated and working towards that mission. It's always been sort of a moral obligation for boards, but now it's really a firm commitment requirement.
Great, thank you. And Eric, your perspective on what these new rules mean for boards of directors?
So while I agree with Beth, I don't think it means a lot different from what was happening historically, but I do think now boards are going to be more focused on this than they may have been, meaning they're going to have like specialized subcommittees of boards or audit committees that will be tasked with, among other things, specifically overseeing cybersecurity. So mean, I think what Beth was saying is that boards always, in my experience, have found these issues important, and they, as Sylvester said, cybersecurity is as important as a factory that may burn down. The difference now may be having the precise documented processes that you then need to disclose in your public filings to demonstrate to investors and to the SEC that even though you may have been doing this sort of thing implicitly historically, now you're doing it pursuant to a documented process. And so boards now are thinking, what does that mean? Does that mean my audit committee ought to be have its charter amended to specifically have cybersecurity included as one of their charges? Does it mean you should have a cybersecurity subcommittee? So I think the substance is in a lot of ways the same. I think right now the form is changing a little bit in light of these rules.
Great. And Beth, what kind of tool sets should board of directors use to equip themselves to successfully oversee these cybersecurity issues and make informed decisions?
Sure. So there's many GRC and board dashboards that can help boards easily consume information, metrics, and critical key performance indicators about their program. But I guess what's most important is what are they measuring? And so we advise clients all the time on the what and why, what they should be looking at to make sure that they are safeguarding information. Do they have business continuity plans that are being enforced, and are they looking to make sure that privileged user accounts are being closely monitored and across systems that may house critical information? What are those key things that are necessary to truly protect that enterprise, that business's mission in safeguarding that information? That's probably most critical. It can be done with a number of tools that the business probably already has in place, but making sure you have the right metrics is critical.
And Beth, just to follow up, are you seeing that boards are starting to bring in some of their cybersecurity expertise, like CISOs, into the discussions?
We're definitely seeing more of that. It's a critical part of the board's decision process, understanding with transparency the state of the cybersecurity posture of their business. And so we are certainly seeing more of that, and also helping fulfill those roles where necessary as businesses are really maturing that area.
Eric, are you also seeing that in terms of boards needing to or wanting to increase the presence of the cyber expertise at the board level?
Yeah, and I am, and part of it's also just defining new roles within companies. So CISOs or CIOs, not every public company has those sorts of roles. I think now you're seeing more roles defined at the CISO level, at the Chief Information Officer level, and then those folks are often serving as now advisors either to a disclosure committee or directly to the board when providing either quarterly updates or ad hoc updates if there's an incident or an event that needs to be assessed for possible disclosure.
Great. The next topic I want to pivot to is near and dear to my heart as an accountant, materiality. These new rules require the disclosure of material events, material incidents. But there's a difficult question of how companies and boards need to evaluate and need to develop a framework and evaluate both the quantitative and the qualitative factors to determine if an incident is in fact reportable under the new rules. Eric, just wanted to get your thoughts on how companies should evaluate this materiality determination for incidents and comply with the 4-day requirement.
Well, I mean, the short answer is to say that companies need to look at materiality the same way as they have for any other issue historically, and that standard has been set forth in case law. And I'm sure the SEC will say, we'll hear from Sylvester and Amy, that it probably hasn't changed. That said, in reality, there's different factors you need to consider with a cybersecurity event typically, or incident, than with, let's say, an accounting fraud. We have a quantifiable amount of money that may have been misstated on a balance sheet or in your cash flow statement or elsewhere. And what makes cybersecurity incidents more challenging is they tend to be more qualitative than quantitative in impact. And so I think companies should be thinking about taking a SAB 99 type framework and tailoring it for a cybersecurity incident and then adopting that so it's repeatable over time. So if the SEC asks what was your basis for determining materiality, you can say, even though sometimes it's subject to second guessing, here's the framework that we've applied and here's the process we went through.
Great. And Sylvester, there's an obvious tension here with the need to balance transparent cybersecurity disclosure with concerns about disclosing truly sensitive information that could be exploited by threat actors. Any perspective on that tension?
Yeah, I obviously thought about this question, and I guess the best answer that I came up with not sure if it's perfect, is the analogy of if you're a consumer, if you're a client of a third-party vendor and your data has been breached or your information has been stolen, what information would you want from that vendor or third-party service provider? I think there is a way to get that information without the vendor communicating information to you in a way that potentially can be misused by, let's say, a bad actor at your own firm. So one hears of incidents that happen out there, and I was recently out in the industry where breaches happen and entities, third-party service providers that are breached make such communications all of the time, and they know how to make those communications in a way to communicate it in a way that the victim, it's useful to the victim without disclosing the sort of like how the sausage is made that can be exploited by a threat actor. So I think that's how I would approach it if I was in Eric's shoes and giving advice to a company. There is a way to make this disclosure to still protect the company's sensitive information. The other thing that I would note is that there is, as you all know, there is this exception that whereby public companies can seek, in essence, a timeout, if you will, from the Attorney General of the United States, where if there's a potential harm to national security or physical harm to someone, where that information can be withheld from disclosure for some period of time. I think up to 60 days, I believe. So there is that option as well in those instances.
And Amy, are companies under the new rules required to disclose material cyber incidents that impact third-party service providers to the company?
So it is increasingly common for companies to use third-party service providers, but whether a cyber incident is material to a company is not contingent on where the relevant electronic systems are or who owns them. As the final rule release explains, and going back to the topic materiality in the situation turns on something we lawyers all know, that it's how a reasonable investor would consider the incident's impact on the company. We do understand companies may have reduced visibility into third-party systems, and they should disclose based on information available to them. So the rules generally don't require companies to conduct additional inquiries outside of their regular communication channels with the third-party service providers, and that would be like pursuant to the contracts that they have in place or in accordance with the company's disclosure controls and procedures.
Great. Eric, after the initial disclosure is made in a cyber incident under the new rules, there is a continuing reporting obligation as well. How would companies, or how do you think companies will be considering their obligations under these continuing reporting obligations?
Well, I think honestly it's the most challenging part of the rule because anytime you're dealing with a cybersecurity incident, you're typically conducting an investigation and you're learning new information, sometimes hourly, sometimes within minutes. And so, as I understand the rules, if you disclose certain information in an 8K, because at this point you've determined information to be material, now you have 4 business days to disclose, then after the disclosure you learn new additional information, you have to make a disclosure about that. So I think again it goes back to having a framework internally to decide what the cadence is for disclosures and what qualifies as new additional information. My understanding of the rule, and Sylvester and Amy can tell me otherwise, is it's not an obligation to disclose every new piece of incremental information. It's if you learn information that you otherwise would have included in your initial 8K, that's the sort of thing that requires an 8KA. And so I think companies need to just be thoughtful about that. It's obviously now a strict requirement, and so certainly companies have to build it into their disclosure controls and procedures.
And Beth, you and I have talked about companies having an incident response playbook. And what is the value you see from companies having incident response playbooks, and why should every organization have one?
Yeah, so just as Eric was describing, it's really vital to have an incident response playbook, or in some cases, incident response management plan, but also to have it well tested based on the scenario, have it as a muscle memory, because a well-managed incident, if you manage it well, you can oftentimes prevent it from becoming a crisis. It shouldn't, however, operate in a vacuum. It should be tied to your crisis management or emergency management processes, and also include working with a disclosure committee so that they can stay in touch with the incident as it progresses. They change real time sometimes. And so using a framework, the materiality framework that Eric sort of described, they can understand when they need to disclose, when materiality may change and they need to amend their disclosure, et cetera. So it's really critical to have an incident response management plan, have it well tested, and have it tied to the rest of your typical emergency responses.
Beth, can you walk us through what organizations can do to assure the quality of the threat management services provided by suppliers and partners to companies?
Sure. My philosophy is trust and verify. Organizations should really consider their threat management supplier a partner and take an active role in that. Seek transparency. Regularly and routinely monitor and review threats that are managed on behalf of your firm. Take an active role in that. And I think really importantly is make sure that your agreements with that third party or that supplier that you want to treat as a partner have the right stipulations in there so that as the threat landscape changes, as your priorities change, you can hold that third party accountable for evolving with the threat landscape, but also in making sure you're crisp and clear with what your requirements are for disclosure. For instance, if they have problems with third parties, there could be an incident. You want to be able to be aware of that. Another thing that's really important is having the right incentives tied to the services delivered to you, so that your supplier, your partner, has skin in the game as it relates to risk and your business.
And can I just add on that, because it's a really important point, Beth, and I think, and you've seen this probably more than I have, but incidents tend to happen on holidays and weekends and at the worst possible times, and that's not the time to dust off your IRP and to figure out if it's actually effective. I think regular testing and assessments are really important.
And Eric, typically enterprise risk management or ERM is focused on large-scale risk for companies. How can cybersecurity functions integrate into the risk management practices of ERM?
Well, I think Beth hit the nail on the head. Certainly having an IRP, so an incident response plan, different names, incident response playbook, or different forms, having that sort of tied into the disclosure controls and procedures, I would say is critical. I'm not sure all companies have done that, at least before the rule was adopted. And so I think that now your cybersecurity professionals within a public company need to be very closely aligned with your SEC reporting professionals and ultimately the board or whoever it is that's responsible for making disclosure decisions. And part of that makes at least a better program for escalation of issues and prompt disclosures.
Thank you. We've talked a little bit about the disclosure controls and procedures. How do you see this also interacting with internal controls over financial reporting and ICFR?
Well, I think the SEC's, I think, made clear in various cases to date, and even in its adopting release, that, and of course, its 2018 guidance on this as well, that cybersecurity incidents are part and parcel with ICFR. And certainly to the extent a cyber incident affects financial systems, that could implicate ICFR. So I think your internal audit function also should be part of the process to be doing testing on a regular basis over whether ICFR is reasonably designed to include cybersecurity controls.
Great, thank you. Finally, I want to go around the room and answer some questions that might be in the minds of our audience today. I'll start with Eric. How can disclosure committees be more embedded in the incident response process?
So I think it goes kind of to what Beth and I were saying earlier. I think having a disclosure committee that might in and of itself be comprised of the folks ultimately responsible for disclosures, often a CFO, CEO, maybe a general counsel, having permanent or ad hoc advisors to that committee who might be the CISO or the CIO, I think is important. So they have a seat at the table and they can explain the threats they're seeing, the risks they're seeing for cybersecurity threats or incidents, and then really describe in detail the incidents, because it's not always a language that's clear to, at least speaking for myself, a non-cybersecurity professional. Having that person at the table to explain it is really necessary to make sure your disclosures accurate.
And Sylvester, how might the SEC's cybersecurity disclosure rules evolve to address new and emerging cyber threats?
Yeah, I would say First off, I think the rule itself is broad and expansive, like most SEC rules and regulations going back to the 33, 34, 40 Acts. They're pretty expansive language. It all is about reasonableness, acting reasonably, et cetera, et cetera. So I'm not sure there's going to be much need based on new types of threats. One can always sit here and come up with hypotheticals and conjure up a situation where there are certain cyber threats that may require even more expeditious reporting, et cetera, to protect, the markets, et cetera. So one can sit here and conjure up those situations, but it's very hard to predict. The other thing that's unpredictable is that, as you gentlemen both know, having been on the staff, is that the commission is our client, is the staff, they're our client, and our client, however, is evolving. Our client evolves, and whether there will be an appetite for adoption of more rules, pull back on rules, et cetera, ultimately is going to be dependent on things such as elections and who is the commission, who is the client at any one point. So to answer your question, very tough to predict, but I do think that these rules are a great starting point because, like most of our rules, they're very, very expansive and flexible.
Great. And Beth, how can organizations capitalize on the regulatory requirements to communicate the added value of their cybersecurity programs?
So, well, it's a great time to convey to the board, clients, partners, stakeholders, the great work of the cybersecurity team is to secure and provide support for the business mission, but also a great impetus to fortify and strengthen the cybersecurity posture of an organization in those gap areas. Be very transparent what needs to be strengthened to continue to support the business and to make sure that stakeholders' information is secure.
Great, thank you. And Amy, what are the potential implications for noncompliance with these new rules and any rules in this space, quite frankly?
I mean, it's beyond just saying, as with all rules, the Enforcement Division and our CACU is going to look to enforce violations of them. I don't know that sitting here now when they're not even in effect, it's hard to kind of say specifics, but for example, if we're seeing material misrepresentations, if we're seeing omissions in this area and required filings, we're going to look into that and consider what violations make the most sense, what the appropriate remedies are. I don't know that I can give any more specifics on that.
Okay. Sylvester, we understand that there are some proposed rules out there for other registrants of the commission, including broker-dealers and investment advisors. Can you comment on those proposed rules?
Sure. Obviously, they are proposed rules at this point. Whether they are ever adopted or not, to be determined. However, I would say that, as with any proposed rule, oftentimes there's guidance there about best practices or leading practices that, in this case, registered advisors, broker-dealers, et cetera. If I was a compliance officer, lawyer internally for one of these entities, it's certainly something that I would pay attention to and perhaps try to get ahead of the curve, at least with those practices. There may be leading practices that I could preemptively adopt, right? Because if you're a registered advisor, it's all about having reasonable policies and procedures, and that certainly is a guide. So I would take it as a guide for now. And the other thing that I would say is that with cyber incidents, this is something that I've been saying in all my public appearances, is if you are a registered entity, advisor, broker-dealer, we've been talking about public companies, whether there is a legal requirement to self-report or not, I've said we would appreciate such reporting because, as the commission staff, there may be instances where, by you self-reporting, we may be able to get ahead of other potential breaches, or maybe there may be other things happening in the market that we want to investigate. So I've said it in other fora, but I'll say it again today. So if you have suffered a breach, even if you're not legally required to do so, think about self-reporting to us, and we would appreciate that. because there may be broader implications than just what's happened to you. There may be broader market implications that we want to get ahead of, so we'd appreciate it.
And Eric, your perspective on that from the defense bar?
Well, we could spend time talking about the pros and cons of self-reporting, but I think I think that it's important for the SEC to be transparent on what it wants, and I think obviously these rules are pending. And when you see a pending rule, my advice is this is the SEC's views on best practice, regardless of whether it's adopted. So I agree sort of wholeheartedly with what Sylvester just described.
Eric, how do these rules apply to multinational companies that have operations all over the world, and separate from that, foreign private issuers that have obligations to report on Forms 20F and 6K?
Sure. Let me take the second part first because I think it's a little more straightforward. The SEC was clear in its adopting release and in the rules that the annual disclosure requirements apply to foreign private issuers just the same as domestic issuers on a 20F as opposed to a 10K to the extent your year ends, at least going forward after December 15th, 2023. So the first obligations will be in 2024 for those issuers. And then similarly, whereas if you were a domestic issuer, you'd have to file a Form 8K for material cybersecurity incidents, you would file a 6K for an FPI. So there's no difference there. I think the more complicated question is if you're multinational and you have an incident that affects a subsidiary in some other country, does that require disclosure? And the answer is it depends. It depends on what the impact is, if any, on the overall financials. Is it the sort of subsidiary that's rolled up in terms of how you're reporting? And of course, the SEC has been clear in SAB 99 that it's not just the bottom line of revenues that matters. It can be segment level. It could be key performance indicator level. You just have to go through that analysis. But one thing's for sure is you can't just say that an incident happened offshore and therefore it's not reportable. It's much more complicated than that.
Well, that concludes our panel's discussion today on the SEC's new cybersecurity disclosure rules. I want to thank our panelists, especially Sylvester and Amy, for providing their insights from the public sector perspective. It's always critically important to have market participants being able to hear directly from the regulators. Thanks to Eric and DLA for hosting us here today in the Boston office and adding his perspective from the defense bar as someone charged with the responsibility of advising clients in these very challenging matters. Also, thank you, Beth, for organizing this event and adding your deep cybersecurity experience. Finally, thank you everyone online for watching. We'll follow up this broadcast of this webinar with a key takeaways email covering any questions that may have come up during the chat. Thank you and enjoy the rest of your day.